Yeah. Yeah, we had it a little late to make sure Brian could get here. Let's see here.
Yeah, well, let's do it. I'm gonna cut them lights out. I do
Go
better.
ahead. Go ahead.
I can see it better, I think, by it, so if you don't care.
Go right ahead.
That better, or
Yeah.
you sleep better than that.
All right. Yeah. We're rolling.
Hello, everyone. Happy to be here with you today. My name is Renee Bryson. I'm one of the Deputy Chief Investigators for the Division of Investigation with the Comptroller's Office. I've been here a long time, and I really enjoy my job. I love coming to work, and I really appreciate the opportunity to be here with you. Also want to thank you guys online for being here with me as well. I always start all my talks with this, and that is a thank you. Thank you for your service. I know that you are probably like the Comptroller's Office, who's just trying to make government work better, and I know sometimes that's a thankless task, and I will say I really appreciate you being willing to do that. I also want to say this is not going to be formal, so just sit back and relax. And I hope that you leave here with some tidbit that'll help you go out and do your work better and more efficiently. So we're going to talk about what we're going to talk about today is we're going to talk about several things: fiduciary responsibility, particularly the importance of knowing what your responsibilities are and why it's important to fulfill those. We're going to talk about accountability, internal control, and fraud. Now, you guys should know, because I've been a fraud investigator for almost 30 years now, that fraud kind of colors my talk about everything. So keep that in mind as we go through that session, that the things I'm going to tell you today are all colored by my perspective of being a fraud investigator and the impact that it's had. Now, we'll talk about back to the basics, because we're going to be talking about what you can do to, just the simple things that you can do to fulfill your responsibilities. Basics. Basic rule number one, you're a governmental entity. That's different than a private company. Governments have different statutes they have to follow. You're dealing with public money. You have to remember it's totally different from something that many things a private company can do, you guys cannot do in your entities. Also, you're a public official, and in the same way as your company, there are statutes that I say kind of hold us to a higher standard in that role as public officials. So, just some basic things that we're going to kind of start here with. Number three, your records and transactions are public information. We're going to talk about that a lot today because it's so important to remember that everything you do, with a few exceptions obviously, and all of your records really are open to the public. And if the public comes in and wants to look at those, that should be not an issue for them. So keep that in mind as you go through your job and as you do your day-to-day duties. Number 4, you have a fiduciary duty, and we're going to talk about that at some length today about what a fiduciary duty entails. So what is a fiduciary duty? Fiduciary duty is a duty to act with the highest degree of honesty and loyalty toward another person in the best interest of another person. That's the Black's Law Dictionary rule. So a duty to act with the highest degree of honesty is one of the canons, and this is a court ruling, is one of the canons in the court of equity that one who undertakes to act for others cannot in the same manner act for himself. So you can't kind of serve two masters, is what this is saying. Fiduciary duty. Now this is from the kind of law encyclopedia. It says public officers and employees owe a duty of loyalty to the public. Indeed, a public office or employment is a public trust which imposes on the officer or employee the the performance of certain duties for the common good. So I'm kind of reading these definitions because these are so critical. Another one, in discharging the duties which are fiduciary in character, a public officer or employee is under an obligation to serve the public with highest fidelity and undivided loyalty. Now, this you see I bolded because I think this is critical. Above all, a public officer or employee must display good faith, honesty, and integrity. So fiduciary duty is talking about basically to act in the interest of your citizens or utility customers. That's what we're talking about in fiduciary duty. So that everything that you do, all of the transactions that you approve or undertake should be done with the interest of your citizens or utility customers in mind. So if you notice the highlighted parts of those, really it's all about action. Fiduciary duty is about undertaking action. Now when we talk about a breach of fiduciary duty, we're not necessarily saying that there's been a crime or something bad has happened, that you've done something bad. It could just mean that somebody has neglected to do those things which they're tasked to do. So inaction could be a breach of fiduciary duty. So we'll talk about that a little bit. So you just think about responsibilities of your board, responsibilities of you personally, where they're derived from. Maybe your charter or creating statute, your bylaws. Maybe federal, state, local laws, regulations, and those things set forth your responsibilities. Court rulings, legal opinions would have responsibilities. Common practices, maybe. Other ways. So that's thinking about the responsibilities that you have as a public official. Now, primarily, I see those as your responsibility is to govern, your responsibility is to provide oversight. Those are the two kind of overarching responsibilities that you have. Now, from a financial standpoint, accountability and effective and efficient uses of resources, kind of your overarching responsibilities financially. And that's what we're going to focus on today. Now, generally, and you guys know this, you're not responsible for the day-to-day operations. But how can you fulfill your duties if you don't at least have a general knowledge and understanding of your entity? Now, another thing I want you to remember, and we'll talk about several times today, you can delegate your authority, but you can't delegate your responsibility. And I think that's really incredibly important for you to remember, that you can delegate to your employees or to your management the oversight of the different functions, but responsibility still falls on you. So what can you do? Well, one thing is you cannot, at least effectively, be a couch potato official. So you can't sit back and say, I'm just going to sit here and bide my time and let someone else do the work. That's not fulfilling your fiduciary duties. You also can't stick your head in the sand and just hope that, it's just going to all go away. That again, when you accept these responsibilities as whatever official duties that you've undertaken and in your role as a public servant, you can't stick your head in the sand and not understand what the functions are that your business or entity or board is undertaking. So we'll go again. What can you do? First thing, and I always talk about this, is setting that tone at the top. You as a public official, it's so important to make sure that you set that tone of how you want your organization to operate, and make sure that trickles down all the way through the entity. But certainly it's got the biggest impact if it's set at the top at your level. So what does that entail? That's saying every action we undertake, we're going to consider, is this ethical? everything we're going to do is going to be considered from an ethical standpoint. We're going to make sure that we demand accountability of these public funds that we're entrusted with. We're going to make sure that our employees and our public understands that the internal control and compliance, the environment that we work in, we're going to stress it's important to make sure that that money is safeguarded. We're also going to provide oversight. And I like to stress that oversight, since that's one of your responsibilities, that how important it is to say, we're going to be that oversight board, we're going to fulfill that part of our duties. And here's what you can do. You can say, I'm going to take personal responsibility. At least I'm going to do what I need to be doing to make sure that I'm fulfilling all my duties. I'm not going to be a couch potato. I'm going to get up and I'm going to start moving. And I'm going to start moving today. And how am I going to start fulfilling my duties? First of all, I'm going to become qualified. I'm going to learn about my organization. I'm going to do what I need to do to know how my organization operates and what I'm responsible for. So whether that's becoming familiar with the laws that affect your organization and what your responsibilities are, whether it's asking questions. If you review, you say your audit report and you don't understand, you can ask questions about that. I request and review documents if I have questions about my organization. All those things that I need to do to at least become generally aware of what's important and what's required for me and for my organization. I'm going to go to training just like you're doing today. It's incredibly important to learn all that you can about your responsibilities. I'm also going to listen. Sometimes your employees tell you things, your management tells you things. If you can listen to what they're saying, follow up on those, and see if there's things that need to be done to correct problems or to fix transactions or fix processes. Listening will help that to help you to understand and know what's going on in your entity. Also, there's a couple things that I'm very, very adamant about. Never sign anything that you have not read, ever. Just don't do it. It never works out well, or rarely works out well for people. Be accessible so that people can get in touch with you if they do have concerns, or if they want to share celebrate something good that someone's done for your entity as well. I'm big about this. Educate yourself on the financial and accounting documents you're responsible for. If it's your job to understand what a general ledger is, if you don't know what, or to read the general ledger or reconcile bank statements or whatever your job is, if you don't understand those documents, you're not going to be able to do that. So make sure that if you are responsible for any kind of document, particularly accounting documents, that you know what you're looking at. Not that you just look at them, but understand them. I think a bank statement's a really good example of that. In this particular case, if you look at this bank statement, is there anything that you see that would concern you if this was your entity? And I'll blow it up a little bit. Anything here? Do you see there's no deposit for this whole month? Most entities, that's not going to be something that would be common. So at least you know that you might want to ask a question about it. That's something that you know to look for. So what are you thinking? If you're looking at a bank statement, you might see the number of deposits. Is that common? Is that normal for your entity? Timing of deposits. Is your money going in the bank timely? The amount of deposits. The makeup of your deposits. Are you having cash or are you having checks? Also, you've got your image checks, hopefully you're going to be looking at. The payees on the checks, the signatures on the checks. We've had a lot of entities that I've looked at, a lot of bank records that I've looked at where signatures have been forged. Had someone looked at the bank statements, they would have caught that right away. And of course your bank balance. Does that make sense for your entity? Do you have all the pages? If you missed it, can you start now? this is just one example of the documents that you might have to look at. Now, as a public entity, I'm a huge believer of this, and that is transparency. Are you being open about your transactions? Again, this is public money, public funds. So now, sticking your head in the sand, you're not going to learn what some of the requirements are for your entity. For instance, there's a law that says you have to charge rates sufficient to fund your operations. Do you know that? Maybe you do need a rate increase. Did you know that there's laws that say that all expenditures have to be for a lawful purpose for your entity? And that's going to apply to almost every local government entity. Now, I always like to remember a few things. Just because everyone else is doing it doesn't make it right. So, also, and here's a good example of why you might not want to do what everyone else is doing. Just because it's illegal, just because it isn't illegal, doesn't make it right. And we'll give a few examples of that. Now, I always think it's good to vet your decisions, any decisions you're making about what you want your entity to do. And sometimes it's just what I call the average Joe test. If someone is struggling financially or making minimum wage, would they be in agreement that this is what we want our taxpayer dollars or ratepayer dollars to be used for? And if you don't have a Joe, would you want to be able to, could you defend your actions on the 6 o'clock news or to the Tennessean or the Knox News Sentinel commercial appeal? Could you do that? Could you, let's just say if it involved funds you donated, would you be willing to have your funds be used that way?
Anybody need a break? We ready to go? Yeah.
What are you doing?
I knew you was in trouble when you brought that
Here you
mic.
go. You never want damn coat. I do it every time I come in here. I freeze to death, boy. The heat and air up there at the school in Dawn's office and my office off of her thermostat. I guarantee I go in the morning, it'd be about 60 degrees. I go in there, walk right back out. I do my time, whatever I gotta do that. When I first get there, I do that. I walk right back out. Huh?
You have to keep up with your time.
Ah, dang. No, what I do, I keep up my time on that. That's it. Every minute of it.
Whew.
Oh,
I have heard from the Veterans Administration, and I've heard from the Sons of America, and the rock should be getting here for the soldier that we've discovered. And the Sons will be out there firing cannons
red.
on Thick Road. I found Philip Britton's grave. Tommy found it. He served 4 years in the Revolution. He was at Valley Forge. That's pretty impressive. And he's buried in one of those pyramids out there on Thick Road at Wilson Cole Cemetery.
Is that what we were faxing in here that day? Cool.
We're gonna do that.
Well, they said it would take like 45 to 60 days for the rock to get here, and I'm thinking that it's 60. I'm gonna think more like 60 to 90, So I would love for it to be at July around in there, and I've now got to figure out. I want to check with the church and see if I can't get transportation, because there's not much parking up there. If we run the church bus.
Shuttle bus. Right.
So, and these are the things that I think of and things that I've seen in my career is cruises. With taxpayers understanding cruises, or you driving a really nice car, or accepting tickets to events from vendors. Your meals, where are they as taxpayers? And again, I'm not saying what you have to do is vet your decisions or think about your decisions in lieu of what you're trying to accomplish for your entity. This is the big one. Use common sense when you're thinking about your transactions. Now, a lot of you are sitting there thinking, but I'm the only one on my board with common sense. I get that sometimes. Sometimes we all think you can't use your common sense if you don't have it. But at least you take personal responsibility to use your common sense in making decisions for your entity. Now, I like this analogy. I heard this one time, someone said it's very easy to become addicted to opium. This was a financial talk that was being given. I'm thinking, where is this going? But what he was saying was it's very easy to become addicted to OPM. What is OPM? That's other people's money. So it's easy for us to sometimes to sit there and think, okay, this is not my money, this is someone else's money, and it's easy sometimes to spend it without really thinking about the consequences, or is this the most effective and efficient way we can use our funds? Okay, let's talk about accountability, because this is one of our financial responsibilities as an official, is to be accountable. So what does that mean? Well, according to the dictionary, accountability is the condition of being accountable. So, required or expected to justify your actions or decisions, subject to giving an account of, capable of being explained, it's responsible, understandable. So for today, we're talking about accountability. We're talking about adequate and appropriate handling of your money, recording of your money, and reporting of your money. That's what I'm going to be talking about, accountability. So the way I see it is not only that you can tell people how you use their money and how you were efficient and effective, but it's also about show. So I always look at show and tell, and show being the primary, the primary of the two, is you want to be able to show. So that's where we get into the documentation issues that your auditors talk about a lot. So now we've all seen the breaking news, and we all hope that we're not on these stories that come out. Comptroller finds city recorder stealing $120,000. Former employee accused of stealing city funds. Former county fire and rescue treasurer charged with stealing over $265,000. So all kinds of headlines that we hope that we don't have to deal with. Well, when you're looking at those, don't you say, how could something like this happen? Well, what that usually is, and what we find in almost every case, is there is a break in trust. So most of the employees that we found, or the officials that we find that have misappropriated funds, usually were trusted employees. So there's a break in trust. There's usually a breakdown of accountability. And that's what we're talking about right now. So we're going to talk about accountability here in terms of effective internal controls. So accountability equals effective internal controls. What is internal control? And I'm going to try to stay away from a lot of the accounting terms. Internal control is one of those accounting and auditing terms. But it's important that you know what internal control is, and as we go through this, hopefully you'll understand why. So internal control is a process to achieve reliable financial reporting, which you want for your financial statements or for your reports, the reports that you receive from your management, that leads you to how best to use your resources effectively and efficiently. It also is about effective and efficient operations to make sure that you're using those public funds in the best way possible. And it's also about compliance with applicable laws and regulations. So internal controls, did you notice that it's a process? Now, if you get down into the details, it's those things that you see done every day. Most of the things that we do related to our public funds isn't it, as an internal control. Like for instance, if you want to document reliable information, what do? You issue a receipt. That documents the amount of money that you got or your entity received from somebody. That's an internal control. Same thing with getting an invoice related to a check you wrote. That's an internal control. That's the documentation to show what you actually spent those funds for. Same thing, if you're safeguarding money, an internal control. You're going to maybe have it safeguarded while it's on hand in a safe or a vault. You're going to put it in the bank quickly. You're going to have limited access, security doors or locks, passwords on your computers. All of those things, those are internal controls. And one other example, if you want to ensure your money is spent or used properly, you're going to have your approvals documented. You're going to have your bid process. So some things are internal controls. They're also requirements by law. But these are things that make sure that you're using that fund, that you can show, not just tell, that you're fulfilling your responsibility of accountability and that you're using your public funds effectively and efficiently. So why do you want internal controls? And that is so that you can show, in addition to tell, how much money your entity is getting, from who and for what purpose, when did it come in, was it all turned in and put in your bank account, was it used for the right stuff and reason. And in addition to that, why do you want internal controls? Because it's required by state law. State law requires all local governments to have a system of internal control and to have internal controls in place. Now, you as the oversight body are responsible for requiring internal controls. Management is responsible for designing and implementing the internal controls. Employees are responsible for complying with the internal control. Now, sometimes we always think it's the auditors who should be responsible for internal controls. They are not. They're only responsible for seeing if the internal controls are working properly. So just keep that in mind. Everybody wants to rely on the auditors to find all the things going wrong in the city, but they're not responsible for making sure your processes work or are in place. They're responsible for assessing to see if they are working. Okay, so accountability of public funds. Let's get back to the basics again. What can you do? First of all, again, if you're going to be accountable, you have to know how your entity works, maybe the places and the operations you're doing that money comes in, where money goes out. So just become familiar with your operation. Ask those questions. If you don't understand, don't be afraid to ask questions and look at documents if you need to. Okay, and again, training is a good way to understand those things that you need to be accountable for and what to do. Now, this is one of my favorite topics, fraud. And I'm just going to give you a little bit of background of fraud because I think it's important for you to know. Fraud, from the dictionary, definition is intentional perversion of truth in order to induce another to part with something of value or give up a legal right. And keep that in mind, intentional. Or a deception deliberately practiced in order to secure unfair or unlawful gain. So the thing about fraud that makes it different from a mistake is that it's intentional. You have to show that the intent is there to prove, at least to prove a criminal act is taking place. Now, people go, well, I'm not worried about, because I know many of you online also are sitting there thinking, well, I don't have to worry about that because all my people I work with, I trust them, I'm honest. Well, I'm glad you think that, but all the training that I go to, the numbers are all over the board. But now we've had people say that 100% of all of us are capable of becoming fraudsters if our personal perception of our circumstances make us feel that we have a need. And so I want to make sure that you understand. So when will basically honest people steal? Well, if they have a need, if their personal perception is, I have a need that I can't fulfill in the legal way, then I'm going to take it from someone from which I'm not authorized to do that. I have to be able to rationalize it, and I have to have the opportunity. And it's when those three things collide that you get your fraud. And here's something I want you guys to know, that sometimes our fraudsters, they may be brand new employees. They may have been there 30 years. It's when these three things happen to intersect in their lives is when they'll sometimes do these things that maybe they wouldn't have ordinarily done. So there's only one of those three things that you can control, though, and that is the opportunity. That's where you get your internal controls, and why they're so important. We're reducing that opportunity to have someone to take our public funds when they shouldn't. And again, those effective internal controls, and again, why it's so important. Okay, I have a question for you. So given equal access to money and other assets, which employee, think about your organization, which employee or official in your organization would have the best opportunity to steal your funds? The most trusted employee. And think about that. Think about why that would be. Because if you don't trust somebody, you're going to be looking at them 24/7. You're going to keep your eyes on them. You're going to say, wait a second, I'm going to make sure I know if they have access to our assets, to our funds. If you trust somebody, they're under your radar. You're not going to pay if you have trust in someone. So think about internal control as the process. It's not about whether you trust someone. It's about the process, and that's what this is about. Is you want to make sure that. I hope all of you trust everybody that you work with, but that does not take the place of the process. You've got to make sure your processes are true. So when you get those officials or employees that want to push back and say, oh, you don't trust me if you ask a question, or oh, you don't trust me if you want to see documentation, tell them this. It's not about trust. This is about a process. It's about my responsibility to ensure the processes are in place and are working. So hopefully you can take trust out of the system and just make it about the process of how you handle your money. And it's always trust but verify. That's another thing. But make it about the process and not about trust. Okay. So, do you guys all think that your collections are being deposited while you're here or while you're watching this online? How do you know? How do you know? Do you know enough about your processes to trust that they are working as they should? And we're going to look at some, like this is a daily receipts or daily cash report from one of our entities. And I'm going to blow it up here so you can see, and it's not a great copy, but it's such a good example of a couple of the points we've talked about today. So in this case, you can see that the payments on account are $9,173.33. So that's made up of cash receipts of $1,215.41. You can see the bank payments of $578.93 and checks of $7,300 plus. So, and that all totals up to $9,000. Well, you know that the bank payments, if people pay at the bank, that's not going to be that money coming to you. So if you just do simple math and add the cash and the checks, it comes out to $8,594.40. Easy. So what should you see a deposit for? You would think you would see one for $8,000 for the amount of the cash and checks, but instead, in this case, and I apologize for the bad. This is the best we could get this look. The deposit was $73.78.99. This has been going on for some time. So they asked her, which, if you notice, that's the amount of the checks, and there is no cash. So this has been going on for some time, and so someone finally asked the question about, hey, how come these deposits don't match? And the person responsible for making the deposit says, well, the bank really wanted me to deposit our cash separately. And they go, oh, okay. But they failed to follow up to make sure the cash was actually going into the bank. So they asked the question, which was a good thing, but they failed to follow up if the answer, whether or not the answer made sense or was true. So what happened, well, for one thing, you would definitely want to make sure, if you ask that question, you get the answer, that you follow up and see if that makes sense. In this particular case, the person that was making all the deposits did everything. And I bring this out because this lack of internal control, I guess, is one of the things we see in most of our investigations, and probably what we see the number one internal control deficiency is they had inadequate separation of duties, and that person was the only one that made the deposits, saw the bank statements, pretty much did everything for that entity. In this case, she had done that to the tune of $32,000, where she had just failed to deposit the cash. So her officials really thought their money was being deposited while they sat there and watched this film. And it had not been because there was a breakdown in the process. Someone almost asked the right question, but didn't quite go far enough.
Everybody good to keep going?
So let's talk a little bit more about fraud. Definitely, if you have a reasonable suspicion of fraud, report it. It's required by law. And the law says that a public official, if they have a reasonable suspicion, must report that to the comptroller's office within a reasonable time, and that's been determined to be within 5 days. So if you have, and if you just have a question in your mind, call the comptroller's office, because we can talk to you about it. To see if something is normal or maybe something that you can follow up on. So I'm going to tell you a story about one of my, the investigations I did about a fraud. I call it the wolf in sheep's clothing, and you'll see why as we go through this story. And I thought this was a good illustration of that. So, here's how the story went. So, March 10th, we had the mayor of the city of Luttrell come to talk to our comptroller, Justin Wilson. And I got to sit in on that meeting. And here's what he asked. He said, is it normal for an employee to make a deposit into a city bank account using a personal check? Now I'm asking you, is it normal? Well, you might have a property tax payment or rate payment. How about a check for $5,000 from an employee? That would not be normal in my experience. But here it is. And it went into the bank, $5,000. Okay, so I'm already interested in what's going on here. So what he said, here was the mayor's story. He didn't think it was normal either. He was asking us. But here's his story. So a banker who was also a friend called him up and said, hey, we've got this check. And so he asked has the banker, which is where the city did their banking, hey, can you look? Do you see anything else unusual besides this check? And So she looked and she said, hey, I've got 5 other checks. I have 5 checks, city checks, totaling over $10,000 made payable to the city recorder and her husband. Okay, so the mayor's thinking, okay, now we have a problem. There seems to be a few other checks. They may be payroll checks. We don't know. And I think he realized at that point that there's something that he's going to need to report. The second signature on the bad, on the what I call the bad checks, was the vice mayor's. So now he's concerned that do we have another city official involved? What's going on? So he comes to the comptroller's office to talk to us about this, and this is what he tells us about this, about the city recorder. So she is paid from 2 separate accounts every month, from the utility account, from the general fund. So she's getting 2 checks. I'm sorry, every week she gets 2 checks from 2 different accounts just for her payroll. Then she gets another check every week for cleaning the city hall. So we know we've got lots of checks going to the city recorder. He's looked at some of the checks. Those with his signature appear to be legitimate checks. So he's done that much research. Oh, and there's another thing going on with this city. This city is come before, and the mayor's telling us this story. Hey, I just met with the Utility Management Review Board. So the city's water and sewer fund has been having some issues. It's in financial distress. Now he says that we don't operate alone. We have another local utility district that helps us with our operations. The city recorder's been complaining about that district, and you know, I don't know what's going on now with this other discoveries that we made. He said the city recorder had been telling him that she thought that they were not getting all their money back from the utilities. So he's been concerned about that. Now they're still having to report to the board. So he had already told the city recorder to request the UMRB liaison with the comptroller's office to do an investigation and see if he could figure out what's going on. So he says, I only told 3 families and 3 close friends about this. Nobody else knows what's going on. I really want to talk to the vice mayor because he's a good friend of mine, and I'm very concerned about his signature on these checks, and I really need to tell the board. So this was a Thursday. I get on the phone, we call the bank, and the bank was incredibly responsive to our request to just get their bank records. We needed to get their bank records. As a matter of fact, she got them to us by the next day, which meant that we were going to work a long weekend to go through those bank records and see what we had. And we found a lot of stuff that concerned us. So, City of Lettrell, less than 1,000 people. It is a very small town. But a very nice place. This is the old City Hall. It was the home of Kenny Chesney and Chet Atkins. So, you know, it's got some significance for Tennesseans. But they just built a big new library and community center, which was very, very nice. And they were in the process of finishing up their new City Hall at the time that we were up there. So we had a nice place to work. City Recorder had been there for 8 years, 36 years old. She had 3 young children. She had obtained her Certified Municipal Finance Officer's certification, which many of you, or all of you, may have one of the CMFO working for you. And there she is in the paper for having done that. Now, her husband did not work for the city in any capacity. We had found that out. So, you should remember that as we go through what we found. So we get up there on Monday, And we got to work in the community center because they weren't in their city hall yet. So, as you know, this is the big joke. I'm from the government, I'm here to help. But this is really what we said to her. Because we wanted a way to go in, and we had some concerns about what we saw, but we wanted to go in and be able to talk to the recorder, get processes, and find out what was really going on. So we met with her, we talked to her about her concerns with the utility that was collecting their utility payments. We said while we're here, we'll look at some other stuff, and we request to look at records. So, a little bit of background. They have 8 bank accounts. The signatories are the city recorder, the mayor, the vice mayor. Now, one of the very first things we found out is none of the accounts were reconciled, which is concerning because that's one of the first things that recorders or people in the financial end of it know that they have to do is make sure that your bank account balances and your book balances are reconciled every month. So that wasn't done, and she let us know that. She also said something that you guys might find questionable, which we did, is that the bank had told her that they would not provide images of their canceled checks, even though she had asked for them. Now, if you hear that, I'm going to tell you that's probably not a true statement. So here's a few pictures. Now, they were in temporary quarters. Probably doesn't explain all of this, but I'm not saying that everybody that's messy is going to have something bad going on in their city, but you can see that there were some issues with the organization too. So let's talk about what we saw. And just, it goes on and on. So, one of the first checks, the first day that we saw a check issued, this is one of them. So we're not talking about little amounts here. So you can see that in September, she wrote herself, September 11th, she wrote herself a $600 check. September 21st, another $600 check. She wrote her husband on the 24th, 3 days later, a $400 check. So this time, her misappropriation started off with a bang, and she started off fast and furious, and it got bigger as it went on. So in October, she went from the $600 range to the $900 range. Now, and these kept going up, as you can see, and so that's still in October. So September, October. You can see the amount of checks and the number of checks that we saw. So think about what was happening. No image checks were coming back. She was writing checks to herself. Now, this went on for several years, is what we found out. So the biggest check that we saw out of this count happened a couple of years later, $3,900. So if you think people won't write a city check for a large amount of money to themselves, think again, because it does happen and we see it.
Everybody good?
I ain't got.
I'm okay.
Okay, so how did she cover this up?
You sound asleep.
She
No,
covered it up by
$3,900.
forging the signature of the vice mayor. So none of the signatures of the vice mayor on the bad checks were his own. So we were able to determine that, and it was very easy to determine when you looked at the signatures on all the checks. Again, another bad checks. Another thing is, notice check number 17425 here for $3,810, and then 17439 for the $3,810 to Steve Ayler. If you looked in their financial records, it showed that this was to a vendor, and a legitimate vendor that you would expect to see in a utility. So that's how she was concealing it. So the auditor came in If they're just looking at the financial records, they're gonna see a vendor, and she had invoices to support it. Some created, some legitimate invoices that she just didn't really pay. She just used those invoices to support the bad check in case the auditor happens to select this particular check to look at. And they looked legitimate. So we kept looking, and we also saw that she was getting extra payroll checks and checks for travel that were not legitimate. This was fun. So look at this document. Looks right. Municipal Clerk Institute. Okay. It's something that you might see for conference registration. I thought this was the other thing that went with it. So we're going to stay at Embassy Suites. This supported one of the payments that we saw. But look at this. You're just a few clicks away from finishing this transaction. Guess what? The transaction never really got finished. We checked with them. She never attended this conference, even though she got paid. Another way she was concealing it was just by creating chaos. In the time that we looked at, there were 316 transfers between accounts totaling up $1.6 million. An account with, of a city the size of less than 1,000 people, that's an incredible amount. Most of the transactions in all the accounts were transfers between accounts. It just created chaos so that it was hard to tell what was going on. Now, we sat down and talked with her. And contrary to what you see on TV, this is not how we do, how we sit down and talk to people. We also don't have it too casual, but we do sit down and talk with people in a very respectful manner. And I thought her story and the way she told the story was about as good, better than I could do, so let's just read it. It says, I, Rebecca Ayler, have been employed at the City of Luttrell since 2008 as city recorder. I've had my CMFO since around 2010 or 11. I'm the only bookkeeper for the city and reconcile all the accounts. I have written unauthorized checks to myself and my husband Steve Ayler for a few years. In addition, I have written extra unauthorized checks to myself. No one gave me permission to write these checks, and no one knows I wrote them. My husband is not aware of the checks, and that's what we find a lot of times, that spouses and family members are not aware. My husband is not aware of the checks made payable to him that I deposited into our joint account. I started writing the checks because we needed the money. I was trying to make ends meet. The signature of the vice mayor is not his. The checks were, signature of the Vice Mayor Jody Smith, the checks were not written by him. I signed his name on the checks. So she goes on and talks about signing the account. She says she put the $5,000 in when she got her income taxes back to try to pay some of it back. So think about this. The fact that she deposited money trying to pay a little bit back is what got her initially caught. I thought that was a little funny to think about. She said she was sorry she did it, and she didn't mean to cause any harm. She was just trying to make it. Now, it got a little interesting after she talked to us, because basically she says, okay, I'm leaving, and she gathered her stuff and left the building. So we had already explained to her that we would talk to the city officials. When we went to with her to gather her stuff and walk with her, she had been thrown up all morning, and she told us that the reason that happened because she was so concerned that we had come in there and were talking to her and asking questions. So we talked to the mayor and vice mayor, and we kind of told them what was going on. So the mayor says, well, how are we going to conduct business? She's been our recorder forever, and I'm a little bit concerned about getting into computer. This is where it got really interesting that evening. So we called the computer company and said, okay, we need to get our passwords changed, or the city needs to get their passwords changed. And they looked in it and they told us that, hey, someone's gone in and deleted all your records from your account. That was a moment of, you get that sick feeling in your stomach. I had it, the mayor had it, but they forgot to hit send to trash, and the computer company, the software company, was able to restore all the city records. But just thankfully, that was just luckily that she had not destroyed all the records, but she certainly attempted to do so. So here's what we found. She misappropriated over $120,000. Over 140 checks written to herself or her husband. She forged the vice mayor's signature on most of them. So it was significant. So as we were going through the city records, and as they brought in someone to help them kind of straighten up and see what's going on, we started finding unpaid bills, or they started finding unpaid bills, to the tune of over $92,000. Some of them a year old. So she had cleaned out the city coffers until she couldn't pay the bills, and that's what we find a lot happens. In total, at the time that we were there, the total amount of money the city had in all their accounts was $3,590. Now, most of you are going to realize that's hardly any entity can operate on that. Thankfully, they had a CD they had forgotten about that they were able to cash in and tie them over until they got their feet on the ground about that. So she was indicted and charged with theft over $60,000 and tampering with evidence because of her attempt to destroy the city records. And she got sentenced to 11 months and 29 days. It was a very interesting, I thought, investigation because of the length of time had gone on and the amount of money that she took from that small town. Some lessons learned that sometimes, and I want to point this out to you officials, that it's hard, sometimes it's hard to do the right thing. For that mayor to call us, that was a hard step for him because he knew what was coming in terms of this becoming public knowledge. Sometimes we have to lose the blinders. I think they trusted this person so much that they just didn't question that she was doing the right thing for the city. Fraud has far-reaching consequences. In this case, it affected her family, affected her husband, particularly affected the city. And somebody has to come in and clean up the mess, whether it be where somebody is thrown up all the way to the fact that the city was in horrible financial condition when this was found. So, I got a couple things I want you, I have suggestions to be able to fulfill your fiduciary duty, to deter fraud, and to assure accountability. Number 4, we're going to go backwards. To require your internal controls, ensure that they are implemented. Learn your business, get a general understanding, follow up, ask questions. And number 1, provide adequate oversight. Now I have just a last thought to share. You guys can look at these guys and think, who are these? Well, they're the villains, right? So, if all of our fraudsters came in like this, we wouldn't have any problem. You know, every camera in your facility would be trained on them. You would know what they look like. But that's not what fraudsters look like. Fraudsters, so these are the villains. These are what fraudsters look like. These. And you guys might recognize that these are a couple of employees from our office that because fraudsters look like us. And that's something I want to leave with you. The other thing is, always use common sense. I can't stress how important it is. Just use common sense when dealing with your public funds. I appreciate your time. I appreciate your attention. I hope you all have a wonderful rest of the day. Thank you.
Leave about 2 minutes.
Go right ahead.
If it takes that long.
Was that the whole thing?
That was the first hour, so we'll be ready to start our second session now.
You gonna start it, don't you? Come that long.
No, we won't, don't want you to miss a minute.
Wally, seen that picture? He said, "Can I ask you who the hell it is?" He didn't know either one of them.
Didn't know his own daddy. Is he losing it?
He can't see them.
Oh, okay.
My wife pulled up, her was talking to us. We were sitting out there in the yard. Mike pulled up right there. He turned around, Mike left. He said, "Who was that?" I said, "You couldn't tell who that was, but it was." "No, I ain't got nobody outside." Mike boy.
Well, the house next to us that they had rented out, evidently, she's moved out or something, 'cause they are cutting the yard.
Is that the trailer?
No, hers is,
Oh, on the top side.
yeah, the house over there that she had lived in, it's on Depot.
Talked to Eddie last night, Eddie Adams. He said that, he was gonna have his house appraised. That's what he's gonna ask for, what he appraised for. He appraised for way up now.
Probably will. Well, that means I'll probably get some good neighbors.
That big appraised for 500.
I don't know if that'd be good, but they won't be broke.
I'm serious.
I'm telling you, I've lived in a very affluent neighborhood. You know, we've had the people that own the funeral home over there.
What about your back door neighbor?
She seems to be really nice.
You know who it is.
I do, Tina Robin, yeah.
No, you're back right behind you, in that trailer.
That's Tina Robin Wilson. Tina Wilson?
Tina.
Yeah.
Yeah.
Yeah, her middle name's Robin.
Yeah.
And then we had Sarah and Charlie, and she owned the farm next to Saturn. Still, I guess she passed it on to her.
Does Tina, did she buy that, or she bought it?
Yeah.
That's good.
So now I laugh, I say, my concern where I want to live now is as close to the emergency ambulance station as possible.
I know. Don't trust me.
Well, I just learned today when we were at the library, the McQuitty what they call the McQuitty plantation, was where my ancestor Stigall, that was his place. Because Tommy has been obsessed with finding out the murder history in our yard. So we've been over there looking up information in the newspaper to find the whole story. He got 10 years for second-degree murder.
Really?
His name was Ben Lentz, Lentz. He killed James Edwards
On the property where
on the
y'all
property
live.
where we live. He has absolutely just had to know the whole story.
Let's go.
How many hundred years ago was that?
1927.
Hello, thank you for being here today. My name is Susie Singleton. I'm a senior investigator with the Division of Investigations within the Comptroller's Office. Today we're here to discuss fraud, and many people think fraud can't happen here, but I've got case studies that will show it can. So please note that my presentation today does not necessarily affect or reflect the opinions of the Comptroller of the Treasury, the Office of the Comptroller, or its affiliated divisions or its staff. They're mine. many people think fraud can't happen here. It can. So our objectives today are to discuss where fraud can happen, the areas that fraud can touch, what fraud can look like, and what you can do to help prevent it or to catch it. Fraud can happen in a multiple of areas within utility districts, cash collections, drop boxes, water receipts, adjustments, write-offs, late fees. There's a laundry list. As you can see, it goes everywhere from where there's cash or money to credit card usage, travel expenses, payroll, purchasing, contracts, timesheets, paid leave, water tax, water lines, equipment purchases, sales. There's also wear and tear of equipment, receipts, stores where you may have accounts at, related party transactions. And then you have conflicts of interest with employees, with commissioners, city and county boards, and with vendors. So for guidance, you can go to the Water and Wastewater Financing Board, your city charter and policy, board minutes, entity policies and procedures, state travel regulations, per diem, and lodging rates. So common forms of fraud. Fraud can happen before an asset reaches the entity, such as they'll take the money before it reaches the books, assets before it hits the floor, or they take assets that are already on the books and they walk out the door with them. So some examples. Stealing time. People who say they're working and they're not. Water, stealing tools, supplies used for their own personal use, parts and equipment. Some employees remove cash. They'll remove money from the cash drawers, petty cash, registers, customer accounts. They may fail to record payments for tax, leaks, parts, fees, and then they go in their pocket. Creating overages in cash funds. You do that so when somebody comes in to pay a fee, say they owe $125, you record it on the books as $100. Therefore, when you put the $125 in the register, that register is then over. You take that money out, nobody knows the difference. That's what an overage is. And using the entity credit cards for personal use. That's a easy way that employees can steal funds. So we're going to talk about our first county entity. And in this case study, there were customer complaints that were a red flag. There was also missing cash, payments not reconciling, voided transactions, higher than normal voids by one particular person, a lack of segregation of duties, management was not performing a proper review, and intimidation of employees. So with this entity, auditors meet before they start an audit, and they discuss an entity and they bring in the prior year auditors so everybody gets on board and knows what happened in the prior year. So that's what happened here, and they noted red flags. So they had so many voided transactions that were abnormal and by one person. When a void is entered into the system, the employee had to enter a reason why the void happened. And it was always a good reason. She never wrote on stealing funds. It was always sounded reasonable. But when you look deeper at her, she was having financial issues. She had multiple divorces, kids, one moving out. She had health issues. So what we did, we took the transactions. This was a county clerk office. So a county clerk office issues license plate tags, renewal stickers. They take the tax on purchased vehicles. They give out marriage license. They take business fees. So she would take a transaction that had been paid for. The individual, the customer, had received the tag and walked out the door. She would later void that transaction and pocket the cash. So we had to trace every void in the system and see if it had been re-entered. Was that license tag reissued to another customer? Was that renewal sticker reissued to another customer? We also had customer complaints that when they came in the following year to pay the renewal, they were told they weren't in the system and had not paid the previous year. Several smart customers went out and brought their license tag in and showed that they had the proper tag and sticker. That was red flags that management did not pay attention to. So we interviewed coworkers. We interviewed her, and she confessed. But she only confessed to a small amount. Most people do not confess to the full amount, ever, and rarely on the first interview. But she did confess to doing some of it, and we went from there. We also had to trace those sales tax to the Department of Revenue. We determined that the bad actor took at least $10,070.14. She also forged documents. So when somebody buys a new car and they need to tag it, they bring the documentation to the county clerk's office and they note how much they paid for the car. They have to pay sales tax on that car. So a tax amount is figured and they pay that amount of money. Well, they turn that check or that cash, and it's surprising how many people pay cash, over to the county clerk office, and she would take that paperwork, void the transaction, resubmit the paperwork that she filled out at a lesser sales price, therefore the tax was less. So she would pay back a small portion, but again, everything was fraudulent. They misrepresented information to the comptroller's auditors, which is against the law. Duties were not adequately segregated in the office. The individual that was reviewing the voided transaction log was actually the same person that was doing all the voids. So that didn't work at all. Inventory records were not accurate. They could not be accurate because as she voided transaction, those tags and those stickers should have been re-entered back into inventory and reused. But because they weren't true voids, they walked out the door and their inventory records were off. And during all this, we found out that employees were processing not only their own county clerk transactions, but they were processing the same transactions for their family, which is a no-brainer as an issue. It's a major conflict of interest. County Entity 2. In this county case, individuals were taking cash payments. Payments were not reconciling. The report of activity wasn't matching the revenue. There were voided transactions. And a major red flag, the employee quit when they were questioned about some transactions. So the red flags on this case is when the finance department questioned the employee about some missing documentation, the employee quit. What we found out when we got there was the employee, the bookkeeper, rarely took time off. She emptied all the cash drawers. She worked up and made the deposit. And the deposits were not made out if she wasn't there. So there wasn't a secondary person that could go and collect the cash and take it to be deposited if she wasn't there. If she wasn't there, it didn't get done. There was no reconciling of receipts to deposits, and there were no reconciling of adoptions to receipts. She came in early to work on the books. Those are all red flags. The bookkeeper was slow to balance. The finance department was consistently having to ask this employee for the records, for the books, for documentation and paperwork. And she was constantly out of balance with the trustee's office. The trustee's office works as the bank for a county. This entity also held huge fundraisers, but very little money was coming in, even though this was a very wealthy county. And they held frequent adopt-a-pet shows on TV, so you know that they were reaching consumers who would come in and adopt a pet. Therefore, that should equal fees for each adoption. So in this particular instance, this was an animal control center, and when a credit card is used, those funds go directly to the trustee's office. So the animal control center never sees the credit card funds, but they do receive cash and checks. So because on this particular day transaction, the trustee received $101.80, and they kept waiting for the animal control center to acknowledge that money and turn over the day's collections so they can reconcile. 3 months after the initial transaction, they still had not reconciled. They still had not turned over any documentation. And that's when the finance department questioned the employee. No documentation had been turned into the finance department for any of these funds. After questions from the finance department, this employee came into the office with a report system generated showing that she had taken in $457.80 that day. And then because the trustee, $101 automatically went to it, she was short $356. She claims that it must have been lost. Maybe it fell behind a desk. Maybe it fell in the trash. These were her answers. She didn't know what happened to it, but she did turn in her notice and quit. When we got done, the actual transactions for that day were $762.80. So what we found, there were no receipt books. We started at the most recent transactions and went back until we found no more errors. Unfortunately, we went back to all the way 2005 when they had a major system change, and that was as far back as we could go. Within 2 weeks of that new software system, she was stealing funds. The new system had timestamps for every transaction. The transactions couldn't be deleted. She could void a transaction, but the transaction never went away. So we could actually trace the transactions. And we had data going back to the installation date. The other thing that was really helpful for us and interesting to note was because nobody was questioning her on these transactions, the only time she deleted any transactions was when the finance department asked about the $101 at the trustee's office. Nothing. So almost 5 years of transactions, and she was just stealing whole days of transactions, putting money in her pocket. Total documented loss. So she started in 2005. She got $2,700. She maxed out 2007, 2008. The interesting thing to note on here is when it gets down to $16,615, that's when the county started accepting credit cards. And remember, credit card money goes straight to the trustee's office. So she never touched it, couldn't steal it. Before then, she was stealing $25,000, $26,000. That's a lot of money. That's a lot of pet adoptions and a lot of dog food. So remember, you have to ask doing to verify their day's transactions? Ask others within the entity what they're doing to help balance, to help reconcile, to help make sure that all the transactions are posted appropriately. Ask about reports. Trace the numbers through. Unfortunately, the director of the Animal Control Center, the bookkeeper would come in and report to the director and the board of all the transactions that had occurred that month, all the pet adoptions, all the spay and neutering that was done, all the vaccinations. They also paid to have shots. They paid for people to pick up their lost pets. They were accepting donations to build a new animal control center. But nobody ever took those numbers and traced it through to the revenue and said, this is how much we need. That would have been a very easy check. So, how many new customers have you opened up? Do customers have a deposit? You should see all those new deposits coming into your account. How many taps have you sold? You should see the money for those taps sold for the month. How many new water lines have you had to install? How many new meters? Do the customers pay for the meters? Those kinds of questions need to be asked. You need to compare reports, the monthly reports to the quarterly reports. You need to compare the quarterly reports to the yearly reports. And then you need to compare prior year to current year. Ask about variances, get explanations.
Everybody good?
Good.
I think so.
So you have to know your entity. You have to know what they do. You have to know their prices, their cost. You have to know about how many customers they have. You have to know the policies and procedures. Ask about segregation of duties, also known as the separation of duties. This is where you disperse the critical functions of that process to more than one person within a department. Without a separation, in your key processes, you're going to have fraud and error risk. And it's far less manageable. So examples of some segregation of duties. Dealing with cash. One person opens an envelope containing checks. Hopefully you have a policy that cash is not accepted in the mail or a drop box. Another person records the checks into the accounting system. This reduces the risk that checks will be removed from the entity and deposited into a person's own checking account, which has happened. In accounts receivable, one person records cash received from customers and another person creates credit memos to customers. This reduces the risk that one employee will divert incoming payment from a customer and cover the theft with a matching credit memo. In inventory, one person orders goods from suppliers, another person logs them in as received. You also need to make sure you tag any equipment or large items as belonging to the utility so it doesn't walk out the door with an employee. Payroll. One person compiles the gross and net pay information for a payroll and another person verifies the calculations. This keeps a payroll clerk from artificially increasing payroll, which has happened for some employees, or at worst case, paying a fake employee. So fraud. Think it can't happen in utilities? It does. Our first utility had unapproved bonuses, theft of time, unallowed travel expenses, missing inventory, misuse of credit card, unapproved water adjustments, and lack of board supervision. We've already talked about how all of this stuff can happen in a utility, It can happen just about anywhere. So for utility one, they had $293,779.22 in unapproved bonuses that employees received. The board had approved Christmas bonuses. That was on record, documented in the minutes, and it said how much they would get. And that's good. But the rest was not approved. This was the superintendent deciding employees needed a little extra something. They got bonuses for Easter, Thanksgiving, 4th of July. There were bonuses periodically within the year for no apparent reason and very uneven. So he would hand out marbles throughout the year, and depending on how many marbles you had at the end of the year, you got a bonus. And I wonder how many employees went and bought a bag of marbles. There were additional issues uncovered at this utility. There were issues with credit card, travel, theft, inventory, and leave records, and we'll talk about those. So the additional issues included board members being overpaid, conflicts of interest, water adjustments. Water adjustments were made to volunteer firemen, residents, and board members and employees. So on the credit card issues, there were many personal purchases by employees of the utility. So if you look at this receipt, you can see the time and the date, and it was during work hours. And they were at the movies at Opry Mills. So not only are they charging inappropriate purchases on the utility credit card, but they're also stealing time because they weren't where they were supposed to be and they were on the clock. Not only did they buy additional movie tickets, but they went and had a very nice dinner at the Stockyard restaurant. And if you look at travel regs, $179 meal exceeds per diem. But they weren't following the per diem because they charged it to a company credit card. So that was in addition to the per diem that they received. Other questionable credit card charges. We have meals, because state travel regs say you only get meals if you travel overnight. There were purchases with insufficient documentation, but I can tell you that they were at stores that the utility would not normally need to shop at for anything related to the utility. There were personal charges for Christmas cards and Get Well Wishes cards, various knickknacks and odds and ends. There were hotel expenses for extra nights after a conference. There were airline tickets for a board member. There were payments for spouses of board members. And there were gifts to board members. There were travel reimbursements that were questionable. Meals by board members and employees not on travel status. Remember, state regs say that you have to be on overnight travel to get a per diem. There were meals for spouses of board members and employees. Again, most entities will pay for you to travel. They do not pay for your travel of family members that may attend with you. And again, insufficient documents provided. When employees turn in travel receipts, all the receipts should be detailed. They should not be the credit card slip that just shows the final dollar amount of the bill. It needs to be the itemized bill from wherever they're making their charge. There were also inventory issues. Not sure how people steal a backhoe, but a backhoe went missing. They had theft of 42 water meters and curb stops. There was uncontrolled access to their building and their inventory. When we questioned the employees, they said that the superintendent allowed contractors within the area to come borrow supplies from their storage building. Their storage building was not in a fence. The doors were kept open during the day. There wasn't even a listing that people could sign out items or supplies. So the superintendent had no way of knowing what somebody was taking or when it was replaced. And their inventory records were very inadequate because nobody was reconciling. The other problem with their inventory records was when the water linemen went to put lines in, they would turn a ticket over to the employee that would enter the information into the inventory system. Nobody called the parts by the same name or the same item number. So you had one inventory part that was in there 5 times, spelled differently with a different item number or notated differently on the records. So it was a mess trying to reconcile that inventory and get to a true inventory for that entity. The superintendent decided they needed a boat when they were looking at new sites, and lo and behold, it was housed on private property, his private property, on a boat dock. It came with a motor, and he bought an additional motor, a very big motor, and we never did get the trolling motor returned. The same superintendent did not keep timesheets. There were no leave balances related to his usage on file. He did not claim sick leave. We knew he'd been out for a week and in the hospital in December due to an illness, and that was not in his records. We knew his spouse had had surgery and he was out, and that was not in his leave records. So when they let him go, he claimed to have 150 hours. He submitted a memo showing his sick leave usage back to 2000, and he only took 6.5 days. Not very realistic. And it cost the utility $6,000. Utility board members negotiated for a higher rate of reimbursement for a replacement fence. So the utility had to go down, work on some lines, they tore up somebody's fence, and the homeowner needed the fence replaced, which is normal in the course of business for a utility. But the board member argued that the homeowner needed a higher price fence. What he failed to disclose, he was the contractor building the fence for that homeowner. And he didn't tell the board when they were making those decisions. He didn't tell the superintendent when they were under discussion. So you gotta ask about conflicts of interest, especially in small counties, small towns, small municipalities. Conflicts of interest are everywhere. Additionally, board members receive compensation for attending board meetings. And that's fine. They had voted to have a raise, and it was $125 a month. They additionally voted to pay themselves $75 for what they call road trips. Road trips were when board members would come to the utility and go right around with the superintendent in a utility vehicle, and they would drive what they call drive the lines. So they would drive throughout the county or the district area and inspect the water lines, look at upcoming property, look at areas where they're doing work, discussing extensions, and they were paid $75 for that. While on the trip, the superintendent also bought them lunch. It's part of the meals that we questioned on the credit card. The pay the board members received was grossed up to pay for the taxes. That wasn't voted on, and that was unallowed. So the board members were supposed to be receiving $125 for attending a board meeting. Instead, they were paying them $172, so they received an actual check of $125 after taxes. Wouldn't we all like to receive our pay after taxes? And a board member received extra pay for coming to the utility just to sign checks. This also was not approved by the board. So when the board let the superintendent of the previous findings go, a member had to come and sign the checks. So he came in and he signed it, and every time he came to sign checks, he was paid an extra $75, which was updated to be after taxes. So, utilities have a water policy, usually outlining their customer rates, their fees, their charges, and there's usually standard verbiage in it. This one has, while no customer shall intentionally be treated unfairly, no customer shall be treated in any way that compromises the interest of other customers. So what you have to think about when you're giving out all your water adjustments, your bonuses, your extra pay, the fun stuff to employees, is how is that treating the customers? Because someone has to pay for all that. So you're probably paying for it with a rate increase, poor services,
Everybody ready?
This utility also
Yeah,
gave
wait.
water adjustments. They had a water adjustment policy. These did not meet their policy. So they hosted, out of utility district money, a dinner, sometimes a luncheon, and if you were a fireman, a volunteer fireman, and you showed up, then you got a water adjustment. So I would show up, free meal and a water adjustment, $3,800. They gave residents adjustments outside of the policy, over $5,000. When we questioned the board superintendent on it, he said, why not? He was a good guy in the county. But they didn't stop there. They also gave adjustments to board members and employees. $3,600. All of that adds up. And again, who's paying for that? It's your customers. It's ratepayer bonuses, board overpayments, the questionable credit card and travel, the leave pay, and the water adjustment, you're looking at over $330,000. That's a lot of money for some of these small utilities to have flowing out the door. So what can you do? Ask questions. Even if you think you know the answer, ask the question. Think. Is it a good use of the citizens' funds or taxes? Or, just because it's a small amount, doesn't mean you should ignore it or let it go. Because as we've seen, those small amounts build up over time. And it becomes a lot. Visit the utility. Become familiar with it. Read the policies and procedures. Make sure they're being followed. If you have policies and procedures that you don't like or don't agree with, change them, but make sure it's reflective of what you're doing. Review the water bills and adjustments. Question the ones that are high. Question the ones that may be out of policy. Review inventory logs and ask about adjustments or large changes in balances. There should be a reason, and they should know the reason. Review bank reconciliations and account balances. It does not take 2 and 3 months to balance a bank account. Make sure all issues, outcomes, questions, bids, and approvals are A, within policy, and B, fully documented in the minutes. That means all the documentation you needed to support that outcome should also be entered into your minutes. The budget should detail out salaries by employee and or position, and any changes to that should be approved by the board. And again, documented in the minutes. If the board had looked at the budget in detail, they would have caught some of the unapproved bonuses. Case study of the second utility. We have theft of cash from collections, theft of time, and time is money when you're paying people's wages. They wrote improper checks with false documentation, lack of board supervision, and lack of segregation of duties. In this utility, in just 10 months, the utility superintendent diverted over $300,000 in cash collections. That's a lot of money. He did it by what we call lapping, which is robbing Peter to pay Paul. So he would take customers A money and use customer B money to cover A's. And he did that repetitively over time. So sometimes he actually put money back into the accounts, but it was from another account. So that's why we say he diverted cash collections. He took $69,000 for personal use. That means it was never deposited into the water department bank. He also wrote an unauthorized $500 check and then asked another employee to cash that check and said it was for the reimbursement of purchase of equipment. He then created a false invoice to support that. We're seeing more and more created or fictitious documents. Technology can be a bad thing. So be aware of that. He violated compensatory time policies. So if you have an employee that is receiving a lot of overtime, somebody needs to look at that and schedule it out. If they normally work 40 hours a week and they're working another 120, is that logical? Because we've seen it. It's not logical. It's not believable. So this employee was receiving a lot of extra pay. And yet, he was in violation of the outside work policy. So how could he be working a second job when he was already working so much compensatory time, that he was receiving almost double his normal pay? He wasn't. It's not reasonable. He also allowed other employees to claim time worked when it wasn't. Which brings us to tone at the top. If employees see their management being wasteful, abusing policies, being lax with the money, the employees are going to follow suit. So in utility 3, this one we have unapproved and questionable purchases, improper customer write-offs, lack of board supervision, lack of segregation of duties, lack of documented policies concerning collections and write-offs. How easy is it to spend other people's money? It's a lot of fun to spend other people's money. Unauthorized questionable spending by district management totaling $43,000. Gift purchases, food purchases, other questionable items, meals, electronic equipment, gift cards, entertainment, meal allowances, cell phones, and unearned leave. So the assistant district manager of this utility purchased gifts to employees and a board member who did not tell anybody. $19,000. We also noted that $7,000 worth of that was returned back to the store, Sam's Club, and they got cash. Not only did she buy electronics, but she bought the service plans with it. So when they returned the electronic items, they got full amount of money for the service plans as well. Same employee purchased food monthly on the utility credit card. Over $7,000, really almost $8,000. Again, bought food, personal items at Sam's Club, electronics. And then the district manager ran out of leave, so they just paid him 43 hours worth. Again, no board approval. Customer accounts, this is one of the strangest ones I've seen. So a former district manager at this same utility wrote off a balance of a customer account in exchange for a .38 caliber revolver. The board did take action when they found out that this had occurred. They demoted the district manager, but they continued his employment. There was lack of oversight by the Board of Commissioners. Lack of internal controls. The minutes did not reflect the proper discussions. It didn't have the documentation to support any of the approvals that supposedly occurred. The assistant district manager collected and received funds maintained the accounting records, and prepared and made the deposits. So again, what we keep seeing, lack of segregation of duties. The assistant manager also made the purchases, wrote the checks, and co-signed the checks with the board member. And the board member that was signing the checks never brought all the suspicious activity to the board. The district manager also prepared the vague board minutes without any detail. So, what to know? Each day's money should be deposited within 3 days. It shouldn't be commingled, which means what you collect on Monday should be deposited by itself. What you collect on Tuesday should be deposited by itself. You can take all 3 deposits for Monday, Tuesday, Wednesday to the bank on Wednesday, but each one should be its own separate deposit. Bank deposit receipts should be reconciled to the cash collections. Cash collections should be reconciled to payments received on customer accounts. That's an easy report to print out. And only the accounts payable clerk or the payroll clerk should instigate checks with the proper documentation. Items should not be purchased out of the cash collection store. A check or credit card with appropriate documentation should be utilized. Appropriate documents is a signed PO, a detailed receipt, and invoice. If it's a large item, it should be viewed and tagged as district property. Having proper oversight reduces risk. It's up to the board and management
Put a deposit in that
to
drawer.
create a culture of honesty and ethical behavior.
Sound like a terrible business.
Setting the proper tone at the top, creation of a positive workplace, hiring and promoting appropriate people, adequate training, having and adhering to realistic policies and procedures, and promoting accountability. Learn the relationship of expenditures. Beware of excuses such as, it's just an accounting problem, or it's an adjustment, or it was a mistake. Did any of that get corrected? You gotta ask. Continuously exercise professional skepticism. Make them show it to you. And remind all, are we being good stewards of the funds? Following are some indications of fraud and abuse that you'll want to look for. These items or potential for fraud is greater when they're not there. So when you have a lack of segregation of duties, when there's a financial need, lack of competitive bidding, failure to reconcile the bank statements, unexplained or questionable wealth of an employee, excessive photocopies of invoices and files. Remember, I said forgeries on the rise. Reluctant personnel to take vacations. Lack of detail in POs, invoices, bills, or receipts. Patterns of excessive overtime. Thank you.
That concludes our